everyone, I'm Juliet from Invesco. In this video, I'll tell you more about Invesco US Senior Loan Fund. Invesco is one of the largest senior loan fund managers in the world. On our private credit platform, we manage over $40 billion for our global clients. A big bulk of this AUM sits under the bank loans team. We are a pioneer in the loan asset class. We have been managing our senior loans portfolios for about 30 years, almost the same track record as the asset class itself. There are several key differentiators that set us apart from other players in the market. Firstly, we are one of the very few pure-play loans managers out there. Most of our peers combine their fixed income team with their loans team. Invesco has one of the largest teams with over 20 credit analysts solely dedicated to the bank loans asset class. They look at every company inside and out, not just from a credit perspective, default probability perspective, but we also dive deep into the recovery rate analysis, and we rate each and all issuers and debt from an ESG angle. Secondly, it is information advantage. Bank loans are not a security. And since they are private instruments, it is important to have access to private side information. Leveraging our platform's due diligence database and also the long-term relationship we have with the issuers and the banks, we have this information advantage that is key to be successful. And then it is our scale and market presence. Because of Invesco's size and scale, some banks invite us to get an early look at some new loan transactions and obtain preferred allocations on new issues. This makes us very selective, and we turn down 2 out of 3 deals that we see. Lastly, we have a strong and consistent team over the past 3 decades. Our lead portfolio manager, Kevin Egan, has been managing the portfolio since inception. He has been leading the team to continuously hone the investment process over time, allowing us to build a high conviction strategy. Majority of the alpha in our portfolio comes from our credit selection. Moving on, we can look at our fund more specifically. Firstly, Senior Loans Fund is for professional investors only. In the region, this fund is widely distributed across private bank platforms in Hong Kong and Singapore. This fund offers daily subscription and daily redemption. 90% of our loan investments are senior secured, meaning they hold the highest priority in terms of repayment in the event of default or liquidation. The portfolio has an average rating of B2 and is well diversified across segments and industries. So you may ask me, how do we source deals? There are 2 ways: primary issuance and secondary market. Let's first talk about primary issuance. Invesco has access to all new deal opportunities offered to the market by banks arranging such financing. As one of the largest senior loan fund managers in the world, we serve as an important counterparty for the banks that arrange loans transactions. As I mentioned at the start of the video, our investment team is frequently offered an early look at new loans transactions, as the arrangers often seek guidance on pricing and terms that will appeal to the market participants. In exchange for our feedback on loans transactions, arrangers will often provide us with preferred allocations. When it comes to trading through secondary market, loans are traded OTC through counterparties in the secondary market. The US loans market size is over $1.7 trillion, indicating a high level of liquidity. These loans are subject to daily mark-to-market valuation, allowing for potential sales at any time. As one of the most active trading counterparties in the market, our traders maintain ongoing dialogue with other traders in the market. These conversations often lead to secondary market investment opportunities. So let's talk about our investment process. Our portfolio managers and credit analysts actively monitor the entire universe of loan issuers within their assigned industries and sectors. All loans go through a rigorous due diligence process. We build our own model, look at all the issuers' financials, speak with the management team to break the credit down to determine the probability of default and recovery rate. We manage our portfolio to maximize performance, not to avoid defaults. When it comes to fund positioning, we are long-term investors. We deploy a consistent, high-conviction, opportunistic investment style and seeks to out-yield our competitors over the long term. In terms of positioning, if you look at the benchmark, IT and healthcare are two largest sectors that make up for close to 28% of the index. But these two sectors are our largest underweight. This shows that we invest based on our credit conviction, and we are contrarian. Our team sees more attractive opportunities in the gaming and leisure as well as the transportation space. Another sector we like is diversified media. This sector includes a wide range of media companies from publishers of educational materials to outdoor media companies to some sports-related businesses. We see good value in some issuers and expect their financial performances are more resilient to market conditions. When it comes to risk positioning, we have also been proactively de-risking our portfolios over the past 2 years, lowering our exposure to companies deemed most vulnerable to inflationary pressures. We switched out of some of our single Bs to double Bs loans. As such, we have been moving up the portfolio's credit quality. You may see we have allocations in the triple C bucket. Those are some potential candidates that we have high conviction in, which we believe are well positioned to outperform over time. Due to Invesco's size and market presence, we often sit on the steering committee of these issuers, which allows us to participate in the restructuring process and drive the outcome in the event of default. There are some names that we have held through the restructuring process, and then we ended up selling these names and recovered more than par. Just to sum up, underwriting is key to managing a successful bank loan portfolio. We have an exceptional large team dedicated to the asset class. The breadth and depth of our investment team, as well as our informational advantage in underwriting companies, is what set us apart from our peers. Thank you so much everyone for watching.